Hi there, welcome to Kneppy and Invest, and welcome to another answer and reply video. The markets are closed. I did read something the other day about equity market going to be open 24/7. Maybe not 24/7, but 24 hours. I didn't actually read the article, but maybe I should have, because maybe that's where I should be trading. Anyway, the market's closed today because it is Saturday, 30th of November, 2024. Current time in Brisbane is 1 p.m. and a fairly rainy day outside. Not completely rainy, but we have seen some showers off and on. Anyway, so in today's video, what I'll be doing is going through some of your comments and your questions and answering or just replying to the best of my ability. Now, sometimes I will read one of your questions and I have absolutely no idea. No idea at all. And I will try to say I have no idea. Sometimes I have a little bit of an idea and sometimes I have a pretty good idea. Now, even though I might have a good idea, my idea could be wrong. So that is a definite possibility when I'm answering some of your questions. So keep that in mind. I am not an expert at all. Well, I would not classify myself as an expert, and I would actually also say I'm still in a learning phase. In fact, I'd say I'm still in a learning phase for the rest of my life. I'm just going to keep on learning. And another thing, I love your questions and your comments because many times I have taken a lot from your insights. So if you think your question or your comment might be a little bit foolish, maybe no one will appreciate it, I can almost guarantee you at least one person will appreciate your question or comment, and that is me. Maybe there'll be many more out there who will read your comment, read your question, and maybe it will change the way they invest. Just don't know. Talking about ways of investing, one of the things I'm looking at now is looking at, I think this is from Charlie Munger. I could be wrong here, Charlie Munger. He said, I'm pretty sure it was Charlie Munger, said, if you just bought high quality companies when their share price is at the 200-week moving average, you do significantly better than the overall market. And I actually started looking at that. And there is some validity to it just in my quick looking at it. I have actually had a look at some of the best quality companies in the world. And yes, when the share price does fall to that level or even below that level, that is a great time to buy. So maybe that is the best investing strategy. Just wait for the share price of a company, of a high quality company. That's probably the best or most important point of this investing strategy. And that means you have to determine which companies are high quality, which companies are low quality, which I'm becoming more comfortable in doing these days. But anyway, interesting strategy that I believe does come from Charlie Munger, and I have been looking at it over the past few days. Okay, so let's get stuck into it. Go back a while ago to Roger Dawn. Again, I have no idea how to pronounce your name. I'm pretty sure you've told me, but still no idea. But that's okay because you can't spell my name right. Hi, Nep, without the second P. Any thoughts on the merger? And I'm forgiving you. I'm forgiving you. Any thoughts on the merger announcement between OJC, Orange Juice Company, I believe, Nature One Dairy, and SPC? I think SPC are listing. Looks a bit like a backdoor listing. Now, don't snigger or, what's that word where you snicker? I was going to say snicker. Don't giggle when you see the word backdoor because there are some sexual connotations to that word. Anyway, backdoor listings typically happen when there is a small company listed on the ASX and then the bigger company comes along and says, hey, how about you buy us out? And they're not really buying them out. We're seeing this with Sigma Healthcare and Chemist Warehouse. Chemist Warehouse, they're calling it a merger, but it's not a merger of equals. Chemist Warehouse is by far the bigger company. It's a high quality company. And eventually, I have no doubt they're going to change the name to Chemist Warehouse. So what Roger Dawn is saying here that Original Juice Company is a fairly small company and SBC is a bigger company. And this is sort of like a backdoor listing. And maybe the name will be changed. Okay, I have not been following this at all. So I have zero thoughts. But it doesn't mean we can't look at it. And when I say we, I mean me. So let's have a look at it. Last company I was looking at was Goodman Group. So OJC. OJC. So this is CBA. Now, according to CBA, OJC has not released any announcements in the last month. I find that hard to believe. In the last 3 months, nothing. This sometimes happens with ComSec. Sometimes you don't see any announcements. So if that does happen, I just go to Market Index and yeah, the original orange juice company, and Market Index does have a list of announcements. Original juice company, formerly known as the Food Revolution. In fact, I know this company more as the Food Revolution than the orange juice company. And to be honest with you, I don't follow this company much at all, if at all. If I don't follow this company at all. Yeah, I'm going to say that right now. And one of the reasons why is because I just don't like what they do. I don't think it's that exciting, that sort of thing. Not much margins. I would say there's very little moat, unless there was some brands there. Anyway, so let's have a look at some of the announcements the company has released. There we go. Quite a few announcements that don't pop up on CBA. I wonder if the issue with CBA is for all companies. Let's have a look at Goodman Group. Oh no, it's just an orange juice company for some reason. Okay, so interesting things here. So they're doing a consolidation split. Transformational merger investor presentation, just released the other day, 25th of November. In fact, I am going to only look at this. 46 pages long. There was also a prospectus, 246 pages long. So this could be interesting. And there should be a fair bit of information within this presentation. So it does look like SPC is going to be, just by looking at the title of this, SPC is going to be the company. This is sort of like, again, not a merger of equal. And I think more than likely they will specify that in this. A leading Australian food and beverage business. I can't tell you what SPC manufacture. Here's the transaction overview. We'll get an idea here. So OJC 10-for-1 consolidation. And OJC 18.25%, SPC 81.75%. So definitely not a merger of equal. And there's the shareholder group. So SPC will be the biggest shareholders of this merged entity. I wonder if there should be some sort of financial pro forma numbers within this. Since the carve out of Coca-Cola and Mithril in 2019. There you go. What do they manufacture? I have no idea. Who is SPC? Shepparton Preserving Company. Actually, here we go. Do I drink or eat any of this? Not really. Do I go to any of these places? Yes. And no. Okay, here's some more brands. Do I drink any original juice? The answer to that is no, and no Nature One Dairy. Okay, here we go. Combined businesses, greater than $400 million of revenue. So you think this company is probably going to be profitable, but I'll probably think there's fairly low margins. So $29 million of EBITDA, that's fairly nice, but again, low margins. Leader in the Australian food and beverage industry. SPC is the largest producer of tomato-based products in Australia. So more than likely, although I don't remember this sort of product that I would consume, I'm just looking for one thing I would consume. Just one. All I need is one. I'm not seeing it here. Doesn't mean I won't or will buy shares in this company. Highly synergistic. Yeah, that's a really big buzzword. It's been a buzzword for years. Synergies, this merger. They're calling it a combination, but this merger will be full of synergies. And we're going to be a better company because of it. That remains to be seen. Okay. Now, I'll be honest with you, not much, I don't have much, what's the word? I don't have much interest in this merged entity. I'm just going to have a quick look at the orange juice company's chart. There has been a bit of a turn in sentiment over the last few years. Definitely a bit of a downtrend, and trend is changing. You definitely see that on the weekly chart. Also, share price in a downtrend and starting to turn upwards. So if the share price gets above 20 cents, that would be a good move for the orange juice. Now, they are doing that consolidation, so maybe $2 would be the new price if they're doing a 10-for-1. Anyway, so to be honest with you, not much thoughts when it comes to that particular merger. MAP 0v0. PPK holds about 45% of LIS. Market cap LIS 163 million. Market cap PPK 50 million. Oh, I see. That's really interesting. Really, really interesting. There is a potential that BPK is undervalued, or maybe LIS is overvalued. There's also that possibility as well. Just going to have a quick look at the chart for PPK. Always thought of this company as something else. I can't remember what. And then I realized they were not that. They were more of a listed investment company. Maybe not that, but investment group company. This is a chart for PPK Group. I'm calling the bottom has been reached. And I say the share price of this company now is in a consolidation phase. We saw the share price go on a really good run back in June, and that failed, which is understandable. Share price has fallen a lot over the past few years. I still remember the share price of this company being about $20, $22 back in 2021. So it has fallen a fair bit since then. And you can see whenever the share price tries to go on the run, we do see a bit of selling coming in. And that's natural because a lot of shareholders bought at higher prices. They see the share price going on a run and go, oh, I can maybe sell some of my shares now. So there will be more pressure on the share price. That's why we're seeing one run fail, another very brief run fail, and just recently we saw another run fail, and the share price has pulled back. I do think the bottom has been reached, and I think share price now in a consolidation phase. And I think the other thing backing that up is increase in volume as well since about May. Anyway, so that's PPK. So maybe some good value there, particularly if LIS, which is LIS, lithium, LIS energy. Yeah, LIS energy. Oh, look at that. So I would say there's also going to be a relationship between LIS energy share price or chart and also PPK Group's chart as well. Because if the share price of LIS energy goes on a really good run, you should see the benefits of that translate through to PPK. Anyway, so thank you for that, Map. Some insight there, which I had no idea. Again, sometimes you give me some insight. You give us some insight. Wally, love to get your reaction to BC8's annual report and capital raising. Some interesting Bovine references in the chairman's letter of the annual report. BC8, I thought that was Black Cat Syndicate. I could be wrong here. BC8, it is Black Cat Syndicate. I thought this was a mining company, so okay. What was the question about? Annual report and capital raising. Annual report. Let's go back. There it is. Annual report. I would, other than looking at the annual report, I don't have much thoughts on this company. This is an exploring company. Looks like gold. Don't think they're in production yet. I could be wrong. I don't think they're in production. They just mentioned here gold acceleration expansion underway. Oh, maybe they are in production. Cal East, 4,100 ounces mined and counting. Mining activity ramping up at Paulson. So maybe this company has gone from exploration into production. I'm just going to confirm that. I'm going to have a look at the most recent Appendix 5A just to see if this company had any receipts. If not, let's have a look. A little small amount of receipts. Yeah, a small amount of receipts. And so maybe this company has hit that inflection point of moving into production. I'll have a look at the chart in a second. Okay, so we want to have a look at the chairman's letter, which should be near the start. We can have a look at the table of contents, page 4. Chairman's letter, Black Cat Syndicate. Why is he talking cows? Here we go. I do see the word cow here. In November 2023, I expressed the view that Paulson's will prove to be a cash cow. Okay, I can understand now why he's using the word cow, which will produce consistent cash flows over a long period of time. This will come true shortly. I also indicated there was plenty of other potential cash cows in the herd. Our outsourced funding development processing of the Myri open pit will further this bovine currency west. Our strategy was to buy straw hats in winter. Winter was longer and colder than expected. It, however, is now time to break out the sunscreen to make hay. Does he go on and on and on? This could be interesting. Our studies announced in May 2024 show a combined operating cash flow after all capital of $900 million. These studies were calculated at 3,500 ounces and sensitivity analysis show that 100-ounce movement in gold price would have a combined impact of 70 million on revenue cash flows. I think the chart of this looks pretty good. I'm just going to guess. And yeah, to be honest with you, that sort of chairman's letter, I really like. I like that. It gives some sense of humanity to the chairman. You know, this person's human. Look, he's trying to make some jokes. And I like that. I like it. Particularly over those really boring ones that, well, this chart looks really good. I do like this chart. Look at the volume. Look at that increasing volume over the last 6 months. This is a beautiful looking chart for Black Ant Syndicate. So I don't know anything about the company, but look at this chart. This is a definite, if the share price dips, possible buy. Oh, what a beautiful look. This should be this should be studied and studied and studied, because this is a great chart. Price action and also volume, hand in hand going together. Anyway, so thank you for that, Wally. Your Friedman, better to sell too early than too late. I do like these saying, you never go broke taking profits, but on the flip side, you don't never become rich by always taking profits. And those who do become filthy rich from their investments are the ones who don't take profits. They keep holding their investments, and over time, they can become really, really rich. And you might have heard in some podcasts about some people who bought ProMedicus when it was less than $1, and they no longer hold any shares in a company because they've been taking profits along the way. And I do know one particular gentleman who said, well, if he kept all his shares in ProMedicus, he would be a multi-millionaire by now. So it's true. You never go broke taking profits, but I also believe in letting your winners run as long as possible. Anyway, so better to sell too early. Yeah, so it's a sort of a balanced game. Selling too early, selling too late. You don't think you can time it to perfection. And what I'm trying to do now is just protecting my capital. That's why I do have a sell price for all my trading positions. And if the share price falls below that for a given period of time, it's going to be different for each situation. Then I will take profits. But if the share price keeps on rising, I won't. I will let that run as long as possible. Anyway, Falcon 11 says, thoughts on IPG, GTK, NEU, and JLG. Funny enough, I own all 4 of those companies. Do you think it is good time to buy in the dip for long-term hold? Okay, this was a month ago. So let's have a look at the chart for these 4 companies. Now, funny enough, I actually did an answer and reply technical watch list in TradingView because I was going to do a technical answer reply video. And these were the first 4 companies I was going to look at. And I scattered those plans. This would have been last week, but now I can do it. Now I can talk about these 4 companies. Okay, so IPD Group had a dip, and I do think the market has overreacted. I'm going to say that right now. And funny enough, the share price has bounced off 360. It did this also in November last year. So November last year, November this year, the share price has bounced off 360. Now, the question is, because a lot of shareholders have bought in higher prices, whether the share price can rally from here or whether the share price is going to go sideways. But P ratio of IPD Group is now at 15. I think it's 15. According to TradingView, let's have a look. It's 16.85. So I do think there's value in this company right now, but just based on the chart, I would not be trading this because unless I bought in on the bounce at 360, but I do have a position in IPD Group. I have taken profits, but I still maintain not a small position. It's still a sizable position, but I do think there is value. And that's why I haven't completely sold, because I do think there could be some value here. Neuron Pharmaceuticals is a little, this one's a weird one. Share price went a really good rally at the start of November and then came all the way back down. Isn't that amazing? And it looks like $12 is, there is some support there. And hopefully it's quite obvious why $12 there is support. You just look at that. So before the share price went a run, you can just see the share price remaining just above $12. And when the share price did get to about $12, we just saw some buying coming in. And over the last 5 trading days, share price which had fallen to about $12, we've seen the same thing. Share price is now going sideways. So maybe there is some support at $12 for Neuren, but share price could fall below 12 and that would be a break. That would be a negative move for Neuren. But at this point in time, a bit more negative sentiment in Neuren, and that sentiment could change suddenly. It looked like it might have been changing, but even though the share price went on a run, there was just too much negative sentiment, too many shareholders bought at higher prices, and that's why the share price dropped like that, I think. Gentrack, well, this one's a little bit different. So unlike the other two, which I'll be honest with you, if I was just trading these, I wouldn't be in. I wouldn't have a position at all. But Neuren, I have a longer term position. So both of these I bought many years ago, and I have taken profits with both. And I could probably sell just based off the technicals, but I just want to maintain a position for the longer term. And if I see the share price of IPD Group sort of moving much, much lower than like 360, I will probably add to my position just based off valuation. So I am a value investor at heart, but I have adjusted the way I've invested over the years because there's other ways to invest. Anyway, Gentrack is another one of my long-term holds. In fact, this is one of my longer-term holds. And unlike the other two, there was no reason to sell this. So I've held this one probably for over 4 years now, maybe about 4 years now. And I've just been waiting for a signal to sell. And I have not received one single signal to sell. Now, during the first 2 years I held shares in this company, there were probably plenty of signals to sell. But once it broke out in December 2022, not one single sell signal. It did get close when the share price got below $9. But based off, and what I've done is I've highlighted the 200-day moving average here. And when the share price did get close to the 200-day moving average, we saw some buying coming in. And then the company released their results, and the share price has taken off. Yeah, the share price is just, it's gone up. It's almost gone up 50% since then, which is insane. Johns Lyng Group, this is one I probably should have sold. I was thinking of selling back here mid-2024. There was no trend, share price going sideways. If anything, the share price might be in a slow grinding downtrend. The company released some negative, I think it was negative results in August. Share price took a plunge. At that point, I went, there's no point selling now. I think there's actually some good value in this company, particularly if natural disasters around the world increase significantly, which is a possibility. We just don't know. So Johns Lyng Group, Neuren, and IPD Group, the charts don't look that good at all. I still have positions in all three, and maybe I shouldn't if I was just trading those three companies. And Gentrack chart looks still looks pretty good. Anyway, so hopefully that's helped, even though it's a month late. Astronomic YT, is there a 13F-like version for ASX investors? Because when I see people talk about 13F, it's always based in America. Well, we don't have 13Fs here. In fact, what is a 13F? Is that? I'm trying to remember. I've forgotten what a 13F is. What is 13F? It requires disclosure of the name of the institutional investment manager that files a report. So is this okay? Well, that's not the right 13F. SEC, Securities and Exchange Commission. What is Form 13F? Form 13F is a reporting form filled by institutional investment managers pursuant to Section 13F of the Securities Exchange Act of 1934. What is it? Is this the amount of holdings they... Oh, okay. Institutional investment managers that use the United States mail in the course of their business and then exercise investment discretion over $100 million or more. So if they own $100 million of a position, they have to disclose that or something like that, it seems like. Let's go. What I'm going to do is go to FinChat. I'm just going to go to NVIDIA, maybe. Why not? Filings. I don't know if this will pop up in companies. Form 8, Form 4. Yeah, I was going to say, I'm not sure if you'd see this on the company announcement page, and we're not. A lot of other forms there, by the way. So what I'm going to do now is 13F Berkshire Hathaway. See if that works. I just want to see one of these. Okay, here we go. Berkshire Hathaway, top buys, 13F. Domino's Pizza. So if they change, if they're buying or selling, they have to release a 13F. If it's over 100 million or something like that. Okay, that's what I'm thinking right now, but I could be a little bit wrong when it comes to the 13F. So I don't really look at these at all. So I suppose if you are looking at these sort of companies like Berkshire Hathaway, and you want to know what they're buying and what they're selling, 13Fs are quite important. Do we have that here? We sort of have it here. Substantial holdings. So if we go to, what's a company? Let's just throw one out here. Goodman Group. Why not? Goodman Group. You should see, I wonder if there's going to be none here. Let's have a look. We should say change in substantial holding, ceasing to be a substantial holder, or becoming a substantial holder. And here we go, change in substantial holding. So on the 19th of March 2024, 41 pages long. This is more than likely institution. So maybe this is similar. So this is from, who's this from? State Street Corporation subsidiaries. They increased their stake from 99 million to 139 million. So companies have to, or everyone, including you and me, have to have one of these changes in interest of substantial holding, whatever you want to call it, if we have more than 5% of a company. Yes, if I decided I actually want to put all my money into one company and that amount of money equated to more than 5%, I have to do one of these. You have to do one of these. So everyone has to do one of these. In fact, you see individual investors doing these, particularly for smaller companies. So maybe there's something similar between the 13F and change and, well, not change, but any sort of substantial holding announcement, which I don't really look at, to be honest with you, all that often. Anyway, Just James Dane says Mosaic brands finished. 95% short. I would say they will sell off some of the brands, but the very fact they have $250 million of debt, they are not going to get $250 million from selling off their assets. I'd say Mosaic Brands is finished. Michael K. Ooh, we have the same initials, MK. Perenti breaking out a long-term downtrend at Cheers. Okay, we can look at Perenti. I am trading Perenti right now. Yes, there's me buying Perenti. It was a few weeks ago, and chart looks pretty good. That's all I'm going to say. The chart looks good. I like the chart. This is what I'm looking for. So I bought some shares, some trading shares in Perenti. Yep, that's what I'm going to say when it comes to Perenti. And it did break out about a month ago. Yeah. Sort of, it took a little bit of time, but it definitely broke out. I'd say the breakout day was the 17th of October. Yeah, so that is over a month ago. Definitely. Nerdburger. Please revisit Mithril, silver and gold. Recent price action shows me an uptrend. I think I've done this one. An uptrend and strong bounce from the previous dip. A few good releases have come out. I'll just have a very quick look at Mithril just to see. MTH, I think it is. Mithril, silver and gold. Share price of this company is going to be influenced by the price of silver and gold and also by the individual company's announcements. I don't like this. Share price went up a lot and then has fallen down and just keeps on falling. And look at the volume as well. The volume keeps on dropping. Interest in this company is waning. So the company has to release something. Something has to happen to get the market back interested in Mithril, silver, and gold. Sensei, early video. Okay, thank you. Lazy eyes, US election may be a risk off week. Context matters. Okay, 9-Slide Glide says something about the Universal Store announcement. Positive announcement. Sales are strengthening in recent weeks and the store rollout continues. Share price would likely have been caught up in the Woolworths poor update and sell-off today. Let's have an update to Universal Brands. Why not? Because I have a feeling this chart doesn't look half bad. And I might be wrong, but doesn't look half bad. For me, the breakout was on the 22nd of August, went above that purple box, which is a resistance zone. And you can see we could have bought this company for the next month at a very similar price. And then the share price started to turn up. So the share price struggled, but that's okay. We'll say this is a consolidation phase. Anyway, so Universal Store Brands chart doesn't look that bad. I think the best time to have bought this company would have been back here, back in early 2024 when the share price was about $4. And there was a nice little breakout then on the 22nd of February, again, results. It could have bought at $4.50. Why did I miss that? Don't know. This is exactly what I'm looking for. Reptilian, lower CPI due to power rebates plus low oil costs, believed to be 3.5%. In reality, no chance of lower interest rates before February 2025. I can almost guarantee that's absolutely right. Won't be any interest rates cuts for a while. Okay, here's one from Sensei. When you buy a stock that could potentially 5-bag, 10-bag, 15-bag, well, I'm going to say, I would like to think every single company I buy does have the potential to 5-bag or 10-bag. But that's not the truth. Like Perenti, I'm trading that. I don't expect that to be a 5-bag or a 10-bagger. I would just prefer, like that to be, maybe a 1-bagger. That's it. But some of my small companies, maybe I don't have high conviction, but they do have the potential to be 5-bagger, 10-bagger, 15-bagger. Hopefully one of or two of them have the potential to be 100-bagger. I just don't know which ones. And that's my biggest problem is I don't develop as high a conviction on companies than I think many other investors do. And that's probably the biggest difference between me and other investors, maybe even you, is my conviction just never gets that high. Never gets that high. I always think of the risks. I think, oh, there's these risks. And I think that's one of the reasons why I would never get filthy rich off one company. But on the flip side, that could help me out too, because the majority of people who go not broke, but lose all their money when they invest is because they put all their money into the one company or the one investment. And that's never going to happen to me. So it's sort of, I think there's benefits and there's not so good benefits from it. But the one thing I do know is I'll never lose all my money, but I'll never get filthy rich on one position. So the way I'm doing it is building my wealth slowly over time. Not as slowly as some people, but definitely slower than other people. Anyway, so I do think many of my companies I do own have the potential, but realistically, maybe not. How much minimum do you put into it initially? Okay, it all depends on, it all depends on, again, first of all, my conviction. So sometimes, even though I've mentioned I have low conviction, sometimes I have a little bit higher conviction. So for instance, story stocks. I can almost guarantee you every single story stock out there, my conviction is real low. I just know how hard it is for story stocks to turn into something tangible. It doesn't happen that often. And I know so many of you love story stocks because I get so many questions about it. But I'm not the big conviction person when it comes to story stocks. What's a good story stock? What's a story stock now? BrainChip for many months, maybe even years. BrainChip, at one point, I think BrainChip got to a valuation of maybe $2 billion. Story stock, it had no revenue or very little revenue. And I was just trading it. And as soon as I saw the trend changing, I got out. I took profits on the way up and then I got out. And yeah, because I have so little conviction when it comes to these story stocks. And I think maybe one of the reasons why is because over that 15-year period, when I first started investing, I just saw so many story stocks go up like a rocket and then come down as if the rocket had lost all fuel. So I would say most of the companies that have the potential to be a multi-bagger, like a 10-bagger, my initial conviction will be quite small, and I'll take a small position, and then I might build my position, particularly, and when I say small, I sometimes start positions like $1,000. That's it, $1,000. Then maybe $2,000 for some. For bigger companies or maybe some of my trades, I could go to 3,000, 4,000. If I'm investing in a high quality company and I think there's really good value, I will invest 5,000, 10,000. Nothing over 10,000, but yeah, that's probably my limit. And eventually that limit will rise as my wealth does grow over time. Then do you dollar cost average into that stock with your work income, or do you sell off some non-performing stocks? I think it all depends. So the most recent times I've added to position is I just saw another breakout. A great example of this is Life 360. So 360, I took an initial position on a little breakout. I probably would say this was back in March last year. I saw that, whatever it was, I forget what it was, results, a quarterly update, I think it was. And I saw it and went, this is pretty good. I'm going to take a position. I think it was like a smaller position. And then because the valuation, it's not really a story stock, but they haven't really achieved much profitability yet. But I saw the potential. So I took an initial position and then they released something really good again in August. So I added to my position. So that's how I do it. I don't just randomly choose to buy some more shares. I will look for some sort of catalyst. And this is the case where I didn't double down, I just added to my position. So I've been doing this more and more recently. I never used to do this. And so far, this has worked. Every single time I have added to a position, a winning trade, it has worked. 100% at this point in time. Anyway, so yeah, but I have enough cash. I do have a fair bit of cash on the sidelines, and I redeploy that cash when I see opportunity. So I'm never 100% fully invested. And Just James Dean says all in. Yes, I would not I was going to say I wouldn't recommend going all in, but if you have that risk appetite, if you're really a risk taker, why not? You could get filthy rich, but then you can also lose all your money. If I had a friend or family come to me, well, national, I wouldn't do that. I will never ever advise friends and families what to do with their money. I would never advise anyone what to do with their money. I think everyone should have the power within themselves to decide what to do with their own money. I would never ever go to a financial advisor. Never, go to one of those advising broker, what do they call them, like Motley Fool, and give them my money to tell them, or for them to tell me what to do with my money. I think we need to learn what to do, how to invest, that sort of thing. Anyway, so another reason I said that is because I would never advise anyone. But if I said, or someone said to me, I'm going to put all my money in this one investment, I would just say to them, do you know everything about this investment? Do you know everything that could go wrong? Have you done that sort of thing? Because you have to be prepared that you could lose all your money. And I have spoken to some people who say investing in the stock market is just gambling. And one person actually said to me, I had a friend who lost all their money in the stock market. It's just gambling. It's gambling. I can almost guarantee you that friend put all their money into the one position and lost it all. Just James Dean, buying CSL at half price is a great idea. I think that was if something happened in the market, what would I buy? So if I saw CSL halving, I would buy that. Funny enough, CSL, I'm going to look at the weekly chart for CSL. So remember what Charlie Munger said, what I said at the start of this video. All you have to do is buy high quality companies where the share price is at or below, I'm not sure exactly what he said, the 200-week moving average, you would have significantly beaten the overall market. Now let's look at CSL. I would struggle to find anyone who would say this is not a high quality company. Okay, so let's go back through time. And so from when they listed all the way through to 2002, so we're talking about 8 years, the share price remained above the 200-week moving average. It slipped below it during the tech sell-off, tech wreck, I think they call it. Share price fell a fair bit. So that was a really good time to buy, but maybe most people didn't realize this was a high quality company. And the share price went on another really long run. Look at this, the share price went sideways for a long time. There was a good buying opportunity back in 2012. Share price was about $30. For a very brief period, the share price fell below the 200-week moving average. And then the share price went on another run. Oh, look at that. Oh, look at that. Decade run. And look what's happening now. Share price is going sideways. Share price hit the 200-week moving average in February 2022, fell below. That was a prime buying opportunity for CSL. And we can see the share price actually bouncing off the 200-week moving average the last few times. And since April. Anyway, So maybe this is a really good strategy. I've never actually thought of that. And I just saw this the other day that Charlie Munger said this. I'm not sure if he has. I have to do research on whether he's done it because I have looked at it. I've done a little bit of research on this and it does seemingly work. And it works here. Find a high quality company. If the share price is at or below the 200-week moving average, that's a good time to buy. It's a very simple strategy. Thorley photography. Don't forget, if you go up and down the same percentage amounts, you will head towards zero. Yes. Yes. For those who don't know, what's a good example? Say you have $100 and the share price goes down 50%. You now only have $50. If the share price goes up 50% from $50, you now have only $75. Yes, that's absolutely true. So hopefully that makes sense. Hopefully you understand what that means. Philip says, it's easy to say not to take profits on your winners, but when it's 30% of your portfolio, I doubt you will be sleeping easy. Yes, and that's another benefit to being diversified and having a low conviction on individual positions. Because I don't think ever have I had a position which amounts to 30% of my portfolio. In fact, I wouldn't say I get nervous when a position gets above 10%, but I more than likely will take profits. And I've done that over the past few years. But again, I do want to let my winners run. But if the position gets a little bit too big, that's when I will take profits. So that's absolutely true. I'm not sure about sleeping easy. I have no problem sleeping, but I think it's just risk management. I think it's protecting your capital. That's the way I look at it. Risk management, protecting your capital. And that's very important. And it's another reason, protecting the capital, another reason why I am learning more and more about technical analysis, because technical analysis is actually one of the best ways to protect your capital. The number one rule in technical analysis is don't lose money. Okay, Stu Percy. We'll wait there. Sensei, maybe I had you confused with someone else. Thought you lived in Taree, New South Wales. Yes. I wasn't born there. I was born in Parramatta Hospital. Then my family, I didn't move. Well, I suppose I did move, but my family moved to Taree, New South Wales. They had a choice between Taree and Maclean, which is on the north coast near Yamba. They chose Taree, and that's where I grew up, Taree, New South Wales. So I lived there for about 15, 14 years, maybe 15 years. And then I've lived in Newcastle, Sydney, Massachusetts, United States, New York, United States, New Jersey, United States, Oklahoma, United States, Alaska, United States, Japan. Then I came back to stay with my parents for a little bit of time, which is near Taree, not quite in Taree. It's on a little town called Harrington. Then I lived in Melbourne for a year. Then I moved to Brisbane, and I've been in Brisbane so I moved here late 2007, so almost 17 years. So I've lived in Brisbane the most. So yeah, the most. So yeah, well, I'm more a Brisbane person than a Taree person based off how many years I've lived in Brisbane. Were you born and grew up in Sydney? And your sisters? Yeah, my sisters were born in the United States. So dad is born in the United States, sisters born in the United States, mum born in Egypt, and they moved here just before I was born. I think maybe the year before I was born. Anyway, Stu Percy says, I'm shocked by how many people keep asking about companies that are less than 1 cent with no revenue. Just go to the casino and play blackjack. Okay. I am going to counter this, not counter. I am going to probably suggest why some people are seduced by companies with a share price less than 1 cent. I think I've said this many times. I try to stay away from companies with a share price less than 1 cent. In fact, I think I should raise that to 2 cents. There's a few reasons behind that. And I've also said I'm trying to stay away from story stocks because I have no conviction that they're going to succeed. So less than 1 cent, no revenue. But I see the inducement. So some people think a company with share price less than 1 cent must be cheap because it's 1 cent. Compare that to CSL, which is a share price of, was it $282? It must be cheaper because 1 cent compared to $282. That's not how the stock market works. I've actually mentioned this a few times. That's not how it works. I've been asked, can you provide me with some companies that are cheap? And I went, oh, well, it all depends on your definition of cheap. And they went, well, just give me some companies with a very low share price. But that's not how it works. Share price is not a determination whether a company is cheap or expensive. Some companies with a share price less than 1 cent could be really expensive. But some people, particularly novice investors, that's all they're looking at. Oh, share price is 1 cent. It must be really good value. It must be cheap. And I think, and they also believe that there's much better potential for the share price to rise significantly. So from going from 1 cent to 2 cents, that's not much compared to going from $100 to $200. Oh, that's ridiculous. But I think time has shown that that's not really the case. Anyway, so that's what I'm thinking when it comes to people liking companies with a share price, say 1 cent, and no revenue. And I think it comes back to stories. So a company that has no revenue, they're not selling anything, they need to have a story. They need to be really good marketers. And they could spin something however they want to spin it, how this particular product is going to change the world. And sometimes that can be really seducing. It can be. I wouldn't say I've fallen for it, but sometimes I've seen a presentation from a company with no revenue, and I went, "Ooh, this sounds really interesting." And a lot of times it does sound interesting. The problem is, most of them don't turn. Put it this way: potential means absolutely nothing. It's the ability to turn that potential into something meaningful, like profits, and I think that's really hard to do. Anyway, so a good comment from Stu Percy. He's not the only one. I just wanted to say why I think people really like these sort of companies below 1 cent with no revenue. And I get a lot of questions about these sort of companies. I will answer those questions, but again, more than likely, I am not interested in those companies. Just James Dean says, then there is APA with 1 billion free cash flow and still lose investors' money. Well, let's have a look at APA. Okay, first thing I'm going to do is this a high quality company? Now, based off the weekly chart, and this is a very simplistic way to determine whether a company is low or high quality. Now, you could say if you go back 20 years, the share price has increased over that period. And when the share price gets below the 200-week moving average, could be a good time to buy. Now, the problem with APA, share price has fallen significantly below the 200-week moving average. So maybe this company is really good value at these levels. So if you bought now with APA, you could make significant money. So maybe this company is cheap. I don't know. Haven't really looked at APA Group. Well, nice little bounce, by the way. So nice little bounce. Share price is sort of it's what's the word I was looking for? It's sort of gravitating to that now resistance level at about $7.15. It's trying to get above it. So I wouldn't be surprised to see the share price fall back below there. But if the share price keeps on going higher, that could be a good move. So maybe now is the time to get interested in APA Group. Dev Shah, many explorers. Yes, that's true. And again, I'd say the vast majority of mining exploring companies never make it. I'd like to see some statistics. I'd say 90 to 95% never make it. Anyway, so many explorers, so they obviously aren't profitable, have no revenue. Prices are based on their assay results. Yep. People willing to bet on them are based on tips from those who can understand the potential. While it may not work out in most cases, when it does, you can expect big gains. That's true. That is actually true. So the vast majorities it won't work out, but when it does work out, wow. So I'd say over the past 50 years, the best performing companies on percentage change are probably mining exploring companies, but they're few and far in between. In fact, Andrew Forrest, Twiggy, the only reason we know him is because Fortescue went from share price of 1 cent, maybe, to what it was today. And I don't think he sold anything. And that's how he became rich. It's not different than biotech or tech companies. You just invest based on the analysis by market analysts. They also burn a lot of money in R&D, hence generate no revenue. ResMed and Cochlear are good examples on how potential or exponential gains you can get if you hold on to it. And that's the big question. And that's how conviction comes into play. So if you get this tip, say this mining exploring company had a good assay result, if you can't read those assay results, How high can your conviction get? And I think that is a very important point. It all comes back to your conviction when it comes to these story stocks. What is your conviction? For me, it's low because I just don't. I know the statistics are stacked against these companies from ever producing anything meaningful. Your Freeman, your computer needs more RAM if you tend to have this many pages open. No, my computer's fine. It's just that one ComSec opening. Yeah, it runs fine. It's just ComSec for some reason announcements open up really slow. I think that's what you're referring to. Yeah. It's just that ComSec announcements. If I open up announcements on any other page, they open up instantly. Anyway, so thank you. Yeah, thank you for, yeah. Sanji Vagasi. Hi, Kneppy. Please look at Quickfee, QFE, the company in buy now, pay later sector. Please check fundamentals. Thanks. Okay. Was this in my... No, it wasn't here. Well, I have gone through Perenti and Mithril and Universal. Next one is supposed to be EP1. Haven't got to that yet. Quickfee. Is it really buy now, pay later? I suppose you could say that, but this is not for people like you and me. This, I believe, is for law firms. I could be mistaken, but I did have a look at this company many, many years ago, very briefly. So Quickfee. Oh, I clicked on something there. Hopefully that does not work. Apparently we can have a chat. Now, the reason I want to get rid of that is because it's blocking up. I have this little panel here in... There we go. Quickfee. Now the chart did look interesting. I'm not sure what it does now, but down 8%. So what I'm going to do is have a look at them. Oh, this company doesn't release any pennies 4Cs. That's a bummer. So we can have a look at the most recent business update, but I want to have a look at some numbers. So we go to their most recent Appendix 4E. Yes, let's do that. And again, I've opened this up in ComSec. Oh, it's opened up a little bit quicker, but sometimes it'll open up really slow. And it's just ComSec. It's because I'll just show you. So Quickfee. Go to one of their announcements. What was it? Here it is. I'll just open this up. Open a new tab. It opens up almost immediately. Look, there it is. Yeah. So it's just, yeah, it's not the computer. It's set. Now, anyway, it's open up here. Okay, so let's have a look at some of their fundamentals. Revenue up 37.4%. That's a step in the right direction. $20.3 million of revenue. So the company is growing their revenue. Whenever I research a company, I'm looking at their revenue growth. That's the first thing I look at, because a company can't grow if they're not growing their revenue. It's an impossibility. It's literally an impossibility for a company to grow over a long period of time if they can't grow their revenue, because the only way they can grow their profit is by either increasing the margins or decreasing the costs. And both of those are finite. Revenue growth is infinite. A company can grow the revenue from $1 to $1 quadrillion. It's a possibility. But you can't increase your margins from 50% to 200%. That's an impossibility. And you can't decrease your costs from $10 million to negative $5 million. That's also an impossibility. So revenue growth is the first thing I always look at. So now I'm not going to have a look. Ignore. Whoops. I'm not going to have a look at the historical revenue growth, but the first thing is revenue growth. Now, the company's not profitable. Now, that's not a bad thing at this point in time, but that is a red flag I do have. Companies growing their revenue, but they're not yet profitable. But they could be unprofitable, but generating some cash flow. So I'm going to have a look at some of their financial statements here. And we should be at, no, we're at notes 1. Here we go. So they are operating cash flow negative by $9 million. And just based off this, they do business with law firms. By the way, if you don't know what a company does, you could always just go there and report, and they should mention what they do straight here. Here we go. Quickfee is a market-leading payments, financing, and accounts receivable automation provider for professional services firms, including 40% of the inside public accounting top 300 in the US. So maybe this was for accounting companies. I thought it was for some reason, I thought it was for law firms. Is a leading business-to-business payments and automated engagement to cash workflow solution. So does that fall in the buy now, pay later category? I'm not sure it does. What is the definition? That sounds a little bit different, doesn't it? Yeah. Anyway, if we go back to, so just have a look at the cash flow statement. Yeah, they're burning through cash. How much cash do they have on hand? 13.6 million. So at least they have enough cash on hand, even though they are burning through it. Another thing you can look at is they have segment information. So I do like some of this because it tells you payment and lending operations in Australia, payment and lending operations in the US. So this is a segment information. So looks like they have services in 2 countries, Australia and New Zealand. Sometimes you'll see not only geographic, what's the word, separation, whatever you want to call it. They also have different divisions, and I like that also because you can see how different divisions of a company are performing. But they just separated this company into 2 different geographical areas, Australia and US. Both of them seem like they are not rough. Oh, it looks like Australia might be profitable. Yeah, Australia's profitable. So Australia is profitable. US is almost profitable, but product development is quite high, 4.2 million, and unallocated might be corporate, 2.4 million. So at least Australian side of the business is profitable. Anyway, so this is I'm going to edit there for Quickfee. So when it comes to the financials, so let's have a quick look at the chart. I do remember this popping up recently. Yeah, so this did pop up recently. The one thing I don't like is I probably would like a little bit higher volume coming through. That would be more encouraging for me to see the share price on a run like this with some good volume, but not seeing it right now. Anyway, share price has moved from about 5 cents up to 11.5 cents, so that's a pretty good move. And according to TradingView, the market cap of this company is only $40.9 million. Michael K. Hi, Kneppy. Thanks for bringing Netwealth Super Accelerator Plus to my attention after reading the information guide that only allow 5% investment in a single stock outside the top 300, 20% for top 200, and 110% for 200 to 300. Does this restriction cause issues for you, or do you tend to have a diversified portfolio in super anyways? There is some limits. I won't show you my super, but there are some limits. I can't remember that as being a limit, but I'm okay. I'm pretty sure I'm okay when it comes to, because I'm a little bit more diversified. The only problem is I can invest in any company, but when it comes to the smaller companies, there's a limit there. I think it's like 40%. Maybe it's less than that, 30%. So I can't be fully or wholly invested in the smaller companies. But that's okay for me because I regard my super as my high quality long-term holding platform. So that's where I have all my high quality companies, all my Alphabet, Amazon, Apple, what's the other companies? CSL, Aristocrat, and all those high quality companies. I have those in my super. So definitely diversified. And most of those companies, there is no limit total. And I'm not sure about the 5% limit, but I'm going to trust you. You're right. And I think, yeah, I think it's okay. It hasn't limited me. It hasn't restricted me from doing what I need to do. Put it that way. And I suppose that is, if you do want a diversified portfolio, in my opinion, that's what you should do for your super anyway. Your super should be more diversified. Anyway, that's my opinion. Also, would you be able to please provide an overview on the international securities offered? Are they mainly restricted to the mega caps, or are micro small caps also available? In fact, super, there is a lot. Not all, but there is a lot. Netwealth Super Accelerator International, I think, exchanges. They do have a list. And I'm not sure. Here we go. So this is hopefully, I'm just going to zoom in maybe. I'll zoom in. So not all exchanges in the world, but a lot of exchanges. So these are some exchanges you can buy. So New York Stock Exchange, NASDAQ, London Stock Exchange, Toronto, Paris, Deutsch, so Germany, Netherlands, Japan, Hong Kong, Switzerland, Belgium, Denmark, Sweden, Singapore, Italy, and Spain, which is good enough for me. So the main ones I want are really USA, UK, there's a few companies I want to, Canadian companies that I wouldn't mind buying. There's also a few companies in Europe that I've bought into, Germany, Netherlands. I want to buy some Japan companies, Switzerland, maybe, chocolate companies. And also alongside, have approved securities and costs. So if you download New York Stock Exchange, it'll give you all the companies. Now, it's not all of them. So I have had this problem once or twice, that there's a company I wanted to buy and they said no. Well, they didn't say no, it just wasn't approved. So there's a lot here. And most of these are the big companies, yeah. So it's not all of them. And if that does happen, where there is a company I do want to buy, I also have some money in Superhero set aside to buy those American companies. And so I've set aside, what was it, 15,000 Australian, no, 10,000 American dollars to do that, and they will be smaller positions. So hopefully that has helped you. You just go to this website, this webpage, yeah, international securities, yeah. Okay. Any ideas about last week's drop with massive volume? Will SGR bounce back very soon? Oh, I'm way behind. Okay, maybe not. Will SGR, Star Entertainment Group, bounce back very soon? I am starting to doubt that. I think, yeah, I don't know this one. It might take a while. Based off the most recent updates, it might take a while. I could see this moving either way. I can see the share price just drifting lower for quite a long time, maybe just going sideways. I think it's going to be a while before we see the share price start to go up again. And unfortunately, I do have a position in this company. I should have sold it. Anyway, thank you. Anne Ma says, thank you so much for your insight into Star Entertainment Group. Star Entertainment? Is it Star Entertainment Group? Yeah. Yeah, agreed. There's a huge if for them coming back, but they were bought out recently. So promising a bit. Yeah, anyway, I don't know. Nice says, what do you think about NuScale NYSE SMR? Deserves an in-depth look with conversations around nuclear energy. SMR, NuScale Power Corporation. Ooh-wee, look at the chart. So I have no idea what this company does. What was it called? NuScale. So assuming they are a nuclear power company, yeah, that's what they do. Small modular reactor, nuclear technology. There you go. Founded 2007. CEO is John L. Hopkins. Who is John L. Hopkins? There's a hospital called John Hopkins. I doubt it's the same person because I would assume that maybe it is the same person. Let's have a look. I doubt it. So I'm pretty sure John Hopkins, the hospital, would be someone who's probably dead. Or deceased, probably the better word. Maybe he's related. Although Hopkins is a fairly popular name. Anyway, let's have a look. What's going on? Oh, chart. This is a very pretty looking chart. So this is the sort of company that you probably couldn't buy in Netwealth. What's the market cap of this company? Let's have a ganzer. Market cap is $7.6 billion. Doesn't look like they have much revenue. So this would be a story stock. Not very much revenue, but looks like there's a lot of interest in this space. And that's probably all I'm going to talk about when it comes to NuScale Power Corporation. I am going to put this into my USA watch list. There you go. And this is another, yeah, this is a great thing that you do, suggesting ideas to me. And NYSE has done that with this company called NuScale. I'm not sure I've done an in-depth look with conversation around nuclear energy, but maybe not so in-depth look. Sensei says, I'm the hardest working ASX, New York Stock Exchange, NASDAQ investor on YouTube. I don't know about that. But you both deserve a thumbs up for that. Definitely, I would never call myself hardworking. I love cricket. Do you love the Australian team at the moment? Well, that's a question. Do you love our batsmen? Maybe the bowlers, but do you love our batsmen? 100% returns, 3 times low risk, high reward plays, DGL, Peter Warren Auto, MLG, no doubt about it. Well, there's always doubt. I always find it a little bit funny when someone says, this is going to be a 10 bagger, this is going to be a 20 bagger, this will be an amazing wealth winner for many investors. But there's always doubt. There's always doubt. Nothing is 100% certain unless you have developed a time machine. You've gone into the future and you've come back just so you can write this sort of comment. And so I can almost guarantee you, if you had access to a time machine, you would not be doing that. I'm trying to think what I would do. Anyway, backed by limited supply, property access to capital with solid balance sheets still growing, tough trading periods appear to be over, probably in the rounded bottom phase. I'm more interested in this, the technicals. And most importantly, shares do not get printed by directors to themselves. Now, in saying that, I do think DGL is starting to look interesting. Now, maybe a little bit biased, but this is one I'm finding a little bit more. I'd like to see the share price get to about 70 cents. This is starting to look a little bit more interesting. Last time it looked interesting was back in February, and then unfortunately they released their results in February and it just plummeted. So this is looking more interesting. Peter Warren, which is PWR, they took the T code for PWR Holdings. This is, I would still say this is in a downtrend, but possibly moving into consolidation phase. Possibly the bottom has been reached, but I'm not there just yet calling that. And what was the other one? MLG. This was one I nearly traded, MLG. Consider the share price was in an uptrend, and I thought, it's breaking out at about, in May, share price got to about 75 cents, but it's gone down since. I'm not interested in this technically just yet, because the share price has moved into a short-term downtrend. Share price could continue to fall from here. Gazmo, great stuff, Kneppy. Thanks for sharing your picks. You're welcome. Jeffrey Irving, what do you think or reckon about POL? Looks good to me, both TA and FA. POL. I'm trying to remember what POL is. POL. Oh, Polymetals Resources. Okay. Well, up 11.8% on Friday, the 29th of November. That's a pretty good day. Let's just have a look. Now, when I talk fundamentals, I have heard some people say, and this is they're talking in regards to mining exploring companies. And I think that mining guru said this. I forget his name. He said you have to look at the fundamentals of these mining exploring companies. To me, fundamentals is about profit, revenue, that sort of thing, which means mining exploring companies have no fundamentals. So I think it's all the way or how you describe or define fundamentals. In fact, I've never done this before, so I'm going to do that right now. Fundamentals definition stocks. Why not? What do fundamentals mean in stocks? Doesn't mean this is right. Stock fundamentals are the factors that are thought to contribute to the underlying company's value or worth as a business. Fundamentals can include measurable quantitative data. So that is what I view fundamentals as. Cash flow, debt to equity, and qualitative situational factors like business model and competitive advantage. Okay, so I'll give you that. Maybe there is a bit of qualitative substance there, but for me, it's more about the quantitative, not the qualitative. So it all depends on how you define fundamentals. So when I see FA, I think, is this company producing? So I'm assuming this is a resource company. Are they producing? So the first thing I always look at is the most recent quarterly report. And a lot of times you can tell if a company is in production just by the first page. So Australia's next silver and zinc producer. Well, the word there now, or that whole statement, suggesting they're not in production just yet, but maybe they are close. First production is on track for the first half of 2025. Now, because I know they're going to be in production quite soon, this company is actually a little bit more attractive. I don't mind that. They also have a 10-year mine plan. MPV 414 million, IRR equals 345%, free cash flow 609 million, EBITDA 89 million annum during first 5 years. So is that fundamentals? I think that's close to the fundamentals that I was talking about. That is quantitative. So yeah, I'm not sure what the markup of this company is. So let's have a look-see. I'm doing this via market index. I don't know why, but that's what I'm doing. It's 150 million. So if you look at the markup of this company and just have a look at that particular, those numbers, you could say there is some value here, but there is also risk. Who knows? Maybe silver and zinc prices drop like a rock and this particular mine is not profitable. There's always that possibility. So there is still risk there, even though this company is moving towards production. Okay, so it does look promising. Now the chart, and I'm going to put this company onto my watch list, by the way, because it's near production. Oh, look at that. Just went like a rocket. And do I have this on? Yes, I have this in my mining watch list. So I've already got it in my watch list. There you go. So I've got this in my watch list. I like this. Share price just went sideways for a long, long period of time. And then all of a sudden the volume just exploded. Share price went from 28 cents up to 88 cents, has pulled back. Share price has bounced off the 25-day moving average. So when I see that, when I see the share price move back towards the shorter term moving average channel, this shaded green area, and then I see the bounce, that's actually usually, not always, but usually, not sure what the likelihood is based off probability. So I'm going to say a lot of times I will see the share price bounce off that. So it looks like a pretty good move for Polymetals resource. So I do like the chart. My only concern is the share price did go on a really good run. And whenever I see the share price go like this, increase like that, I always expect the share price to pull back. But if you don't see a sizable pullback, that means a bit of substance to the company. And we might be seeing that right now with Polymetals resources. Now, the question is, when am I going to finish this video? Anderson, 637. Good idea, good tweak. Interesting additional flavor to the pot. 10 stocks you are participating in. Okay, thank you. Thanks for inclusion of the Asian bourses, particularly Hang Seng. Continued coverage would be most appreciated. I don't plan to stop that. Well done, Kneppy. This is from Sensei. When can kindly make a little video segment about must-read books? Well, I've already done that. So, in fact, I just said that the other day. Alexander Bunyip, how's a paint job? Will you happily pay them? Would you have them back? Would you recommend them? By the way, I love your work, insights and bubbly personality. Cheers, not that sort of cheers. How's a paint job? Overall, good. A couple of times I did see a little bit of paint on the carpet, but it actually looks really good. It is. You do have to pay a lot. So that's once, and they did work a lot. But overall, it looks really good. Would you happily pay? Yeah, I won't say how much we paid them. I'm never happy to pay that amount of money, but what's there to do? They did a job, a mostly good job. Yeah, would you have them back? Well, hopefully not, because I don't want to paint the house again. Or not this house anyway. Would you recommend them? Yes. I have no idea who they are because I didn't actually hire them. Anyway, I am going to end it there on how's the paint job, because this video has been going on for almost 1 hour and 15 minutes. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.